Daniel Hannan slams demented Remainers for drooling at prospect of economic. The Tory MEP said pro-EU voices had appeared to celebrate last week's interest rate rise caused by Bank of England concerns over the UK's financial outlook. He pointed to James McGrory, Executive Director of Open Britain, who tweeted after the 0.25% rise, "The Brexit squeeze is real, and it's happening now. These are people's mortgages, including mine, taking a beating." But, writing in the Telegraph today, Mr. Hannan ridiculed the claim. He wrote, "Interest rates have risen from 0.25% to 0.5%, a nugatory rate by any standard. To put it another way, they have returned to where they were on the day of the referendum, before Mark Carney's ill-judged decision to cut further in anticipation of an immediate Brexit shock that didn't come." There is something almost demented about the way continuity Remainers press any piece of news into their predetermined narrative of economic calamity. It's no surprise that they are failing to move public opinion. Drooling at the prospect of a downturn is not a good look. Bank of England Chief Mark Carney announced the increase, the first in over a decade, last week, blaming Brexit for the move and saying inflation had to be brought down. But Mr. Hannan questioned whether such a small rate rise was really such a bad thing when it helped savers and only raised interest rates by a small amount. He pointed out the elevation of low interest rates as the supreme goal of monetary policy led to the credit crunch and the ensuing downturn. The bank warned last week that the decision to leave the EU was having an impact on the country's economic outlook. It said the overshoot of inflation throughout the forecast predominantly reflects the effects on import prices of the referendum-related fall in sterling. Uncertainties associated with Brexit are weighing on domestic activity, which has slowed even as global growth has risen significantly. And Brexit-related constraints on investment and labor supply appear to be reinforcing the marked slowdown that has been increasingly evident in recent years in the rate at which the economy can grow without generating inflationary pressures. There remain considerable risks to the outlook, which include the response of households, businesses and financial markets to developments related to the process of EU withdrawal.